Hey everyone, and welcome back. Today, we're going to be diving into Enbridge Inc.
A company that's, well, they're doing a lot more than pipelines these days.
Yeah, you handed us their Q2 2024 financials, the earnings call transcript, all that. So we're going to, try to make sense of it all for you, especially if you're
Yeah.
thinking about, investing in Enbridge.
Yeah, because there's a lot to unpack, right? I mean, they're into pipelines, utilities, renewables, even data centers now.
It's a lot, and for someone who maybe just, thinks of them as the pipeline company, it's kind of like, whoa, what's going on over there?
Exactly. And that's what makes this deep dive so interesting. We'll see how these different pieces fit into their overall strategy, how they perform this quarter, and what it all means for, well, your money, potentially.
So should we start with like a quick reminder of what Enbridge is all about, just to set the stage?
Definitely. At their core, there's still a major player in energy transportation. Think oil and natural gas. They've got this massive pipeline network that spans across North America,
Those pipelines are iconic. You see them everywhere, but they're branching out, right?
big time. Like I said, they're making moves in gas distribution, renewable energy, even those massive data centers powering the internet. It's a fascinating evolution we'll explore today.
And smart for them, right? The energy landscape is changing, got to adapt or get left behind. But before we get into all that, let's look at those headline numbers from Q2. What kind of profits are we talking?
Okay, so Enbridge reported earnings of, get this, $2 billion this quarter.
2 billion. Whoa.
Yeah, but here's the thing. It's pretty much on par with what they did last year.
So is that like good news or bad news? I'm never sure how to interpret that.
Well, that's where things get interesting, right? Because as any savvy investor knows, those big splashy numbers don't always tell the whole story. We got to dig a little deeper.
Yeah, got to look under the hood, see what's driving those numbers. Like, did they take on more debt? Are they investing like crazy in certain areas? That's the stuff that really matters to investors.
You got it. And we're definitely going to break down those details for you today. Specifically with Enbridge, their debt situation is something to pay attention to, especially with all those recent acquisitions they've made.
Acquisitions. Tell me more.
We'll get to that. But the big picture is they've been using debt to fuel some of that growth. So we'll be looking at how that debt impacts their financial health and what it signals to, well, you, the potential investor.
Because at the end of the day, that's what we're all about here, right? Trying to figure out if Enbridge is a smart bet for your investment dollars.
Exactly. We're here to equip you with the knowledge you need to make informed decisions. So buckle up. Let's explore this fascinating company, shall we?
Sound good. Let's do it.
All right, so let's kick things off with Enbridge's bread and butter. Liquids, pipelines.
Yeah, their pipeline network, it's massive.
Hmm.
But in a world that's, shifting away from fossil fuels, can it still deliver for investors?
That's the million-dollar question, isn't it? And the numbers from this quarter are, well, they're interesting, to say the least.
Okay, so what are we seeing?
Record-setting volumes of oil transported.
Seriously. Even with the Trans Mountain expansion up and running, I thought that was supposed to, take a bite out of their business.
It was. A lot of analysts expected that. But it seems the demand for pipeline capacity is so high right now, it's like a rising tide lifting all boats, at least for now.
Interesting. So even with more competition, they're moving more oil than ever. But hold on, I'm remembering something from the earnings call, something about apportionment. Doesn't sound so
Oh,
good.
apportionment. Basically, there's more demand to ship oil on their mainline system than there's space available.
So like a traffic jam on the pipeline highway?
Pretty much. They have to allocate space, which can be frustrating for oil producers who want to move more product.
And for investors, it's like, okay, even if you're moving record volumes, if you can't keep up with demand, are you leaving money on the table? Something to think about.
Definitely something to watch. Now, while their liquids pipelines are humming along, Enbridge is also making big moves in gas transmission.
Okay, tell me more.
They're building out their infrastructure, especially down on the U.S. Gulf Coast.
Ah, the Gulf Coast. It's all about that LNG, right? Liquefied natural gas. Everyone's talking about
You
it.
got it. Global demand for LNG is soaring, and the Gulf Coast is poised to be like a major export hub. Enbridge is making sure they're in on the action.
So instead of just transporting oil, they're becoming a key player in moving natural gas to where the world wants it. Smart. But how does it translate into, actual investor value?
Well, they've got several major projects in the works. There's the Whistler joint venture, which actually just expanded with the addition of the ADCC pipeline. And then there's the Blackcomb pipeline, which is under construction and expected to be up and running in 2026.
So they're investing billions with a B in this gas infrastructure.
Exactly. They're betting big on gas. But it's not just about pipelines. They're also making a play in the gas distribution business as well.
Right. Those acquisitions we talked about earlier, right?
Yep. With the Questar and Wexpro purchases now complete, Enbridge is officially the largest gas utility in North America. And they're not done yet. They're also waiting for final approval to acquire PSNC Energy in North Carolina.
Wow. They are not messing around.
Yeah.
But for an investor, like, what's the appeal of gas utilities? I mean, it seems a little less, exciting than pipelines or LNG.
True, utilities might not have that same kind of high growth potential, but they offer something just as valuable: stability.
Stability.
Yeah, see, utilities provide this steady stream of regulated income. People need to heat their homes, businesses need energy, and that doesn't really change much even when the economy has its ups and downs.
So it's about balancing things out, right? Pipelines, LNG, those are higher growth but maybe more volatile. Gas utilities, they provide that steady, reliable cash flow. A little something for everyone.
Exactly. And Enbridge isn't stopping there. They're projecting an 8% rate-based growth in their gas distribution business through 2027.
Okay, hold up. Time for a quick explainer for our listeners who aren't, finance wizards. What does rate-based growth actually mean? Like, in plain English.
Sure. Essentially, it means they're investing in their infrastructure to expand their service and make it better. Regulators then allow them to earn a certain return on those investments. So that 8% growth, it basically means they expect to make more money from their utility business.
Okay, so more money for them, potentially more dividends for investors. Got it. Now, let's talk about the big green elephant in the room, renewables. Enbridge, they're traditionally a fossil fuel player, but they're making some noise about wind, solar, even geothermal. Is this just greenwashing to make themselves look good, or are they serious about a cleaner energy future? So are we talking like a little toe in the water, or are they, diving headfirst into this whole renewable energy thing?
It's looking more like a strategic plunge than a quick dip.
Okay, so what kind of projects are we talking about here?
They're investing in offshore wind farms, solar projects, even partnering to explore geothermal energy.
Geothermal. Interesting. Where are they doing that?
Up in the oil sands region of Wood Buffalo, actually.
Oil sands and geothermal. That's an interesting combo. It's like they're trying to use their, existing know-how in a whole new way.
Exactly. And that's a key takeaway for investors here. It's not just about how much money they're putting into renewables, it's how they're doing it.
Using geothermal to maybe decarbonize oil sands production, that's pretty innovative. Could be a smart long-term play.
Right. It's all about positioning for the future.
Because who knows what the energy mix is going to look like in 20 years, right?
Yeah.
But Enbridge seems to be hedging their bets, keeping a foot in both worlds.
Exactly. And speaking of hedging bets, there's one more area we got to touch on, one that really got the analysts buzzing during that earnings call.
Let's hear it.
Data center.
Data centers. Okay,
Yeah.
now I'm lost. How does Enbridge, a company that's all about pipelines and energy, how do they fit into the world of data centers?
It's all about the energy. Data centers use a ton of it, and Enbridge is positioning themselves as this one-stop shop for all their energy needs.
Okay, I'm listening.
So they've got natural gas for reliable baseload power, they can offer electricity, and they can even integrate renewable energy options to help these data centers hit their sustainability goals.
So they're using their existing energy know-how to tap into this whole new market.
And it could be a big one. They just landed a 50-megawatt deal to power a new data center, and there's talk of similar deals brewing in Ontario, Utah, even North Carolina.
Wow. It's like they're everywhere.
Mm-hmm.
Okay, so we've covered a lot here. Pipelines, gas transmission, distribution, renewables, now data centers. It's clear Enbridge is a company that's changing with the times.
Mm-hmm.
But what's the bottom line for investors, the people who are actually going to, put their money where their mouth is?
Right, that's the million-dollar question. Well, financially speaking, they seem to be managing their debt okay, even with all those acquisitions. They actually canceled the rest of their at-the-market program, which means they've raised enough cash for now.
So that's good, right? No need to panic, no desperate scramble for cash. But what about that debt-to-EBITDA ratio we talked about? The one that tells you how much debt a company has compared to its earnings.
Yeah, that's definitely something investors need to keep an eye on. Right now, Enbridge is within their target range, but those acquisitions, they did add a big chunk of debt.
It's a balancing act, right? Taking on some debt to grow can be a good thing, but investors got to be comfortable with the level of risk.
Yeah.
And speaking of risk, those credit rating agencies, they're like the referees of the financial world. What are they saying about Enbridge?
Good news there. They've actually given Enbridge some credit rating upgrades recently, and their outlooks are stable. That suggests their financial position is pretty solid, even with that extra debt.
That's got to be reassuring for investors. And let's not forget those dividends. Enbridge has a good track record of paying them out and increasing them, which is music to the ears of income-focused investors.
Absolutely. We're talking 29 years in a row of dividend increases. That kind of consistency is rare. It shows they're committed to giving back to their shareholders.
All right, so there you have it. We've broken down Enbridge's performance, their strategy, even their financial health. As always, we're not going to tell you what to do, but hopefully this deep dive has given you the info you need to make an informed decision.
The energy sector is changing fast, and Enbridge is right there in the middle of it all. Will their strategy pay off in the long run? That's the multi-billion-dollar question, and one that investors will be watching closely.
It's going to be fascinating to see how it all plays out. This deep dive has given us a lot to think about. Until next time, keep learning, keep asking those questions, and as always, happy investing.